All right, everybody, welcome to Cyber Bowl. So we're going to talk about Tesla stock and what do you think is going to happen to the stock in 2024? What's going to happen to the business? We have the Bulls with us. We have Alexandra Mersch. She's known as Tesla Boomer Mama. We've got Jeff Lutz. He's a supply chain king, but boy, he's manufacturing. He's a factory. He knows so much about everything about the business. And then we've got Xander Sky. This guy is all about the stock movement and stock options and anything you need to know about what might be happening on a daily, weekly, monthly basis. He's the guy. Let's talk about that. Let's get started with you, Jeff. Let's go on. What is your thinking about the Tesla stock right now? I know Alexandra just a few minutes ago, she was laughing going, the stock is flat. So what do we do with that? What do you guys think? Jeff, kick us off. The company and the product. Don't look at the quarterly stock movement.
As a trader, I got to take some off the table and wait for a better price.
A very realistic bull, questioning certain decisions.
The rational bull. We enjoy listening to bears.
Looking for the red flags. You're supposed to react.
Yeah, I think we ended the year strong on the stock. If you compare and contrast, obviously, to last year, you don't even need to do that. But just relative to the fourth quarter, there was a lot of relative strength in the stock, and then the new year hit, and really the whole tech sector has been hit in the first. We've only had I think 3 trading days so far this year, and Apple's been hit with a couple of downgrades, and there's been a little bit of rotation, but not quite sure. I think the market's trying to feel itself out. If we get a little bit of a pullback, it wouldn't be surprising given, we had several weeks in a row of the markets being up to end the year. Wouldn't be surprising. I'm not I do read the stats and the history of if the first day is bad or the first week or the, January dictates how the rest of the year goes. I think that's interesting, but I also think there's a tremendous amount of variables involved. I don't think there's ever been this much money going into the system and coming out of the system at such an accelerated pace as we've seen over the last couple of years. So I do think we're in a little bit of unique territory. I think it is going to come back to, if you're talking about tech and the Magnificent Seven, they're at historically high, P ratios at this point. Some of them you really got to look at PEG ratios because they should still be growth stories like Nvidia, for example. It's in great shape. So I think we've got to get through earnings, and I think we've got to see, are these companies continuing to grow? If they're continuing to grow, I think the music continues. The beat goes on. The music continues playing. The beat goes on. But if they hiccup on earnings, and if they forecast anything that's a little bit out of whack, then yeah, I think there'll be an issue in the tech sector. For Tesla, I think it is going to come down to earnings. I think the delivery report was strong. It showed in a quarter that everybody talked about are there EV demand issues. Tesla had its best production and best delivery quarter in the history of the company, and there are telltale signs that margins could be stronger. I think we're in this little bit of we're in this state of we're not entirely sure. There's a lot of puts and takes. You had the ramp up of the Cybertruck. Was that actually counted? They delivered to employees. You had, significant higher than I think in the last 2 or 3 years, Model S and X deliveries. You had low lease rates. So you had a number of factors that are puts and takes. But I actually think leaning a little bit more, stronger on the gross margin side. So I think the street, in terms of the stock, I think it could be somewhat range bound until we get the earnings. We'll see. I'm not a huge prognosticator of, day in, day out stock trading targets. I do know technically that 234 or so was the 50-day moving average, and we're above that, and showed a little bit of relative strength both on Tuesday and today. So we'll have to see how it goes up into earnings, but I think it's going to come down to earnings, and then earnings is going to come down to what does Tesla forecast, and what does the margin picture look like, and any other surprises. And we're going to talk about catalysts in a bit.
Oh, so I actually think that this is the year that Tesla stock can actually go past just the earnings estimate and so forth. We're on a risk on environment again. You've got money flowing back in. It's the growth stock, the story stocks like Tesla that people are going to put money in. And it's going to be the potential where some of these growth catalysts, as we're talking about, could actually become a catalyst. So this is the kind of topics we're going to talk about today. We're going to continue talking about the stock first, and then let's dive a little closer to the catalysts, what we think is going to happen in 2024. We'll look at all these other topics as well. So I know, Alexandra, you're a little sad a bit there. You're going, it's hard to talk about the stock when it's flat. So tell me about what you meant by that.
It's been flat, but first I have to excuse myself for my voice. I mean, it's been tough, but here I am, right? So the stock has been flat over 2 years. But 2 years ago, that same stock had a lot of fantasy built in, right? People were very optimistic. We were in a low interest rate environment. Then we went through, obviously, 2022, difficult sales by Elon of the stock to finance Twitter, and now 2023, which recuperated. The year-end phenomenon is, for me, a typical window dressing phenomenon, where you have funds having to throw in the cash. They were over invested in cash or over non-invested and had to build up their positions for the year-end reporting. And so you had a lot of purchases in the last 2 or 3 weeks of December for that, and they are sort of pulling those out now, and that can last another week or two. So that's, it's just technicals. There's nothing fundamental about it. But what is very interesting is this morning, Nick Colas in his daily newsletter explained that at this current price, he feels the only part that is really valued is Tesla's auto business, meaning the current car business plus FSD. However you want to model the FSD income, future FSD income. If that is true, you're completely right, Herbert. We have all the catalysts for us, because that means energy is not in there yet. And that's, the easiest to prognosticate because it's already there. It's just an accounting method to understand. And then you have obviously all the other segments of Tesla that have currently no value because Wall Street think this is just pie in the sky and let's see what's coming. So between all of those, and I still maintain, I've been thinking about this the last 2 weeks, that Dojo is the biggest of it all, is for me the clear understanding that the market has no idea what's coming. And that's one of the problems with the Tesla stock, that you can't just be waiting for the day X. And I want to ask that question to Xander, who is option trading, because I know you all sell calls and all that, but I would be so panicked that the day comes, because Tesla moves in single days, right? And then it can for weeks just go flat again. And if you're in options in the wrong way that very day, you just cancel all your gains from the rest of the year, don't you?
Yes, that is one possible outcome. It really depends on how greedy are you. If you're selling calls, which is what you're worried about, and for those that don't understand options, you're willing to sell your shares at a particular price by a specific date. So it depends when you sold that contract, how up are you on it. So there's a lot to consider, but you need a piece of news to create that momentum. And if you're understanding and you're tracking the stock, you can react in a timely manner. So I don't worry about it in that regard. If you look at the last, you could look behind me. You see the trend line, and we bounced off of it right here at the 250. With my options guys, in September, we predicted where's the stock going to end at the end of the year. And guys said 330, 300, 285, and I went with 250, thinking that you're not going to have an earnings thing, no numbers that can make the stock jump. So I think it's important to, look at financials. And if the stock pops like we had when Ford announced the partnership, which was in the 180s or so, and then I got behind on sold calls. I had to roll them, right? There's a strategy that can help you to to not have to take a big loss or to sell your shares. But that's the good part about it. With selling calls, you're only missing out on gains. So it kind of depends. What is your strategy for being invested in the company? If you're looking for that super crazy pop, and you want the 2x or the 3x, then you might not want to play with options. But at the same time, there's direction that comes in. If we're slowly starting to climb back up, well, then you can monetize by selling puts, which means that you're willing to buy stock if it gets to a certain price. But that's the big thing, is like buying options and selling options are two different strategies. If 9 out of 10 purchased calls expire worthless, do you want to be buying calls or do you want to sell the calls? So yes, you'll occasionally get burned. And same goes with selling puts. You can get burned and be forced to close if the underlying stock price drops.
Okay, I want to ask you guys this question. And I mean, I don't want to get past this because I feel like this is a really important point. Tesla is mostly impacted by the macro, and the liquidity in the market and the willingness of people to invest, a risk-on environment. They will throw money at companies like Tesla, growth company. And that alone, regardless of the story about the auto gross margins being flat or being cut, it will override that. How do you guys disagree with this statement that the reason why
No.
Tesla fell the last 2 years was primarily because it's the first kind of stock that will be affected, is first to fall. But it's also the first to rise when the market and the kind of the optimism turns around. Money's going to flow back in. It's the kind of stock that they're going to throw money at, regardless of what happens with the kind of the fundamentals of the company, which is strong, by the way, right? Strong balance sheet, strong ideas. But do you know what I'm saying? Like, isn't this one of the biggest movers for the stock, whether the macro is the investment, willingness and appetite?
That would then move all the Magnificent Seven at the same speed. If it would happen the way you just described, all of the growth stocks would at that very moment move the same way, but it's a competitive environment. So you will have clients, or you will have money managers, or you will have whatever investors who will look at the 7 and will say, okay, I put 20% in this one, 10% in that one, but only 5% in the others. So there are still lots of people that will underweight Tesla. We've seen that even in index funds and in actively managed funds. So the appetite for Tesla hasn't grown yet. The second point is a reduction of long-term interest rates by 2%, and 2% is a lot, would actually move the stock at the moment. If you just do discounted cash flow basis, it would change the stock price by about $30. I mean, you say, fine, that's $30. Yes, that's $30, but it's not huge. It's not what I would consider, if we move from 250 to 280 because the interest rates came down by 2%, okay, nice to have, but it's not this huge change. So it needs actually a combination of multiple things. It needs an appetite for Tesla. It needs the rates coming down, but it also needs some Tesla-owned catalysts. It won't just move, or it won't just move a lot by itself just because interest rates come down. It will move a bit, but it's not going to be as huge as you think it is.
Love it.
Yeah, I don't think people are going to throw money at Tesla. I don't think people are going to throw money at Tesla right now. The earnings picture, I don't have 2024 up in front of me, but it depends where we end 2023. We could be around $3. I mean, we're at a pretty high, the way that stocks are classically analyzed is they're looking at P ratios, or maybe looking at PEG ratios. But these forward catalysts that we're going to get into, I don't think that institutions are like paying daily attention to this like we are, and looking for all these different breadcrumbs. I think the investors that are going to make out when one of these catalysts hit are the long-term buy and hold investors. They're going to they're going to miss it. If there's a big ChatGPT moment with FSD, with Robotaxi, my projection is they're going to miss it, and then there would be kind of a mad rush to get into the stock, and then it would do another one of these parabolic moves. But they would have missed, in my opinion, they would have missed a lot of it because they're looking at these classic measures in terms of the value of the stock. I mean, if you look at it right now, and if we're under $3 of earnings, and you do a multiple of where the stock is today, it would be considered fairly expensive, especially in part of that Mag 7. And it depends what Tesla says in terms of growth. Again, if we get everything that we're seeing right now in terms of Tesla actions tell us that they're getting bullish. They've opened up the hiring, and they're hiring a very wide scope and span of various roles. They've turned on the CapEx in terms of expanding existing factories and building new ones. And those are all very bullish signs. If you were to trace back to June of 2022, Tesla was the first company to start doing indirect labor layoffs, the office level worker layoffs in June of 2022. Then we had 2 consecutive quarters of negative GDP, and we've been in this, high, massive rate uptick environment and, relative slowdown. Even though the auto SAAR, if you just look at North America, GM came out with their estimate yesterday and said it's going to be at 16 million units this year, which would be another very strong year, very consistent with last year, maybe a little bit higher. So if that 16 million comes through and you've got 12% EV adoption in the US happening, who's going to build those cars? I keep asking this question because I think it's relevant. So if Tesla comes out in January 24th and says, we're going to build those cars, we're very bullish in North America, we're very bullish on the growth in China, people love our products, and if they come out there and say, look, we've stacked Shanghai and we're stacking North America, and we're going for it, and they give a pretty big range on what they're going to build for this year, pretty big number, then I think the stock starts moving, because now the market sees confidence coming from the company and coming from the CEO. But if we get another gloomy outlook, I mean, that's the answer in terms of where the stock is going, in my opinion, regardless of if people are coming off the side. If people are coming off the sidelines and the CEO's gloomy and the company's gloomy, then they're going to put their money in Nvidia and Meta and Google and so forth. They're not going to put it in Tesla, in my opinion. So it's really going to come down to how the company guides, in my opinion.
I agree on that one. Go ahead, Xander.
No, please.
No, I agree with you, Jeff. It's a huge psychology game, and we're listening to everything. For example, yesterday evening, I listened to Elon X Space, which was very interesting. And at one moment, he discussed how surprised he is, how much research and development budgets they have at the other big Mag 7. Remember, I did a table on that and showed how lean and efficient the Tesla money is invested and how much more the others. And I mean, it's like 5 times more, 8 times more, crazy amounts. And he addressed that yesterday evening. And I mean, we're listening to all that, and so we hear it. And he goes like, he doesn't even know, what they're doing with all this money, because there's only so much you can buy, right? And that for me is an indicator that, Tesla and Elon are ready to put money where they want it, but they're still prudent about it. They're still trying to make it as efficient as possible. And I think some of those companies that some of you know better than I do, but they've just gone so big that, $1 billion, what's $1 billion? Doesn't matter anymore. Out with it. And that's the point where you lose some of the bigger ones. Yet at the moment, it feels cozy for Wall Street. I always remind people of how Wall Street missed AWS. AWS wasn't that complicated to do, right? It wasn't that complicated to do, and it wasn't that complicated to miss, and yet they all missed it. And I had a discussion over Christmas with somebody who works in one of the other Mag 7s, and he was telling me, you go on about Dojo, Alexandra. What do you think Dojo is better than Google, what Google has or what Microsoft has and whatever? I said, it's the vision part. And he said, it doesn't matter. The other one is the language part. I said, come on, language is word after word after word, and you can feed all the words that you want, and the system will find out what's the most likely next word that has to pop up. Vision is something completely different. You are in a room, you're in a space, and you see and you have to react. That's nothing that you can quantify in words. That it's not the same thing. And if you have built I call it now web space, whatever, the space that can digest vision and that can put the output for others, that can purchase space in that web space that's called Dojo, that's going to be so unique, and everybody else will just suddenly stand there and say, oh, that's what we should have done. And they're just not doing it. I'm looking at all those robots, Herbert, and we had this discussion a couple of days in our DM chat. I mean, yes, there are lots of computers out there, and there are lots of robots now out there that are starting to move, or that are starting to touch, or that are starting to have the articulations that we want to. But none has the combination that Optimus has, but also it's only prototypes, and we all know prototypes is easy, production afterwards is complicated, and then none of them has an industrial use case like Tesla has it immediately. So if you think of all these, possibilities, and they're just right there in front of our eyes, I just wonder why nobody sees it.
Bravo. Alexandra, you always say, if you're going to invest in Tesla for the short term, be careful, because this is a growth play. And you made me think of this idea that Wayne Gretzky, to quote him, right? Skate where the puck is going, not where it is. And Wall Street, it's 12-month guidance. We don't really know what's going to happen over the next 12 months. When and how many rate reductions will we have over the next year? We could have guesses, but I believe the yield spiked today. I think oil prices are falling. There's all kinds of stuff happening. And Jeff, I thought your point regarding the hiring and capex deployment is very important to notice, and then the point regarding the guidance, that's really I totally agree with that. And then Herbert, you said that a company like Tesla was first to fall and first to rise. In actuality, what we saw when the drop happened with the Fed announcing that they were tightening, Tesla was second to last to fall, and Apple.
Yeah, that's what I actually meant. I made the mistake. Yeah, Apple and Tesla are the second to last, the last to fall.
Yeah,
they're the last to fall, but they're the first to rise. Yeah, those are very strong companies. Yeah.
And I look at like Bitcoin as an indicator. Something that was a takeaway was that if it's such a speculative play, that if money's coming out of Bitcoin, then that's a risky hold. So if money's flowing into Bitcoin, then that shows you the sentiment is starting to shift, that people are being looser with the highly speculative stuff.
Okay,
yeah,
let me ask.
Sorry, Herbert. I was just going to say Tesla could start crafting a very clear narrative around people being surveyed about EVs, and people, for the most part, saying they want to buy an EV. I think half the people surveyed said their next vehicle when they roll off wants to be an EV. And then they could show the adoption rate, and they could show the fact that when people buy their Teslas, they have a 97% net promote. They could start stitching all these things together that, that people want EVs. And here's a forecast. We're bullish on this. We're installing the CapEx, we're hiring the people, and and if they get this core auto business kind of just like, hey, this thing's going to run. It's going to run solid. We may not be back at 25% plus gross margins in the next year, but gross margins are going to steadily increase. All the survey data, all of our forecasting data, all the government incentives, the new models we're rolling out, we're quite bullish on where we see this going. And if they craft and stitch that story together, then I do believe money will start flowing back into Tesla, because they themselves believe in themselves and they're telling people why. But if they don't do any of that, then I don't think money's going to flow via osmosis in the Tesla.
I will take the contrary on that. I don't think auto gross margin is important at the moment, and won't be. and won't be for another 2 years. It's all about expansion. It's all about moving from manufacturing EVs, the best EVs there are. There is no doubt about it. Whoever copies Tesla. Nobody copies a Bolt or whatever else. I mean, they all make me laugh with their competition. Even the Chinese. I mean, they're all good. I'm not saying I'm pleased about every EV that's on the street, but it's not about being tackled as the EV leader. Tesla is the EV leader, and everybody else may produce more cars at lower margins or whatever. That's not the issue. It is the leader of a whole industry. But the second thing is that because they started with cars, and I mean, it is absolutely crazy because none of them started the same way. BYD started with batteries and then small cars and then slowly moved up into EVs, okay? What did Tesla do? They started with the most expensive EVs, then got those right, then got the Model 3, went through production hell, then got the Model Y. Now the Model Y is the best-selling car in the world, and now they're getting down to the $25,000 car, whatever it's going to be called. That path is not about margin. That path is about becoming the best running factories, the best working production for what's there to come, which is the bots, which is the vision, which is all those other things that will have to go through manufacturing as well. And it will just, make a complete picture, and cars, energy, it is all coming together into one big thing, and counting cars, and will it be 2.1 million, and will the gross margin be 18% or something, just seems like so unnecessary if you see what's up there in 2-3 years. I get sometimes caught in it as well, and then I tell myself, how stupid, get off that trip, because that's not what it is. It is coming together by the mass production, and it doesn't matter whether BYD sells 50,000 cars more in a quarter than Tesla. All these things animate the media and animate Wall Street, and they have another thing they can tick off their list. But the one thing I completely grant you, Jeff, is Tesla needs to be better at communicating this. Tesla needs to lay this out. Investor Day was good, but Investor Day was still so much on Master Plan 3, raw materials and all that. People don't understand that. I mean, people understand it like us when we dig into it and watch it 8 times in a row, me 15. But what people need to understand is this vision of Tesla, where they are going. And just by doing hiring events or just by doing investor days, it is not commonly understandable. Somebody that watches an AI day, and I think another one is coming, is not walking off there thinking, oh my God, this is the biggest AI company there is. Maybe AI engineers are, I hope so, that's why they're doing it. But what we really would need is somebody who brings this story over in a and I hope actually that's what's coming after the 10K, that Elon is doing that end of January. When I heard that, I thought, oh, that's good, because it is really the perfect moment to pull it together. Cars, manufacturing, factories, energy, Dojo, FSD, everything's coming together if only you show it to the world.
The only thing I would say really quickly back is just, and I agree with, like, you're thinking like we think in terms of long-term. That's my thesis. That's how I'm investing. I'm not investing based on gross margins of X, Y, or Z. I'm talking about attracting institutions and new people into the stock. If the story is there's further retrenchment, and we don't quite know when we're going to get to that next big thing, it's out there where I'm going to promise something. The story becomes, I mean, if we have a two handle in front of our earnings for 2024, it's going to be a tough dance. If they don't guide to a pretty strong number for 2024, I get it. We call it short term, but now we're going on a couple of years. So that's why I think the gross margins would help drive the EPS story and start, okay, is there a story that says it's strengthening again, it's stabilized, whatever? Can it fund the rest of these new things that we're going after? Or does Tesla create businesses and then drive them into the ground? And that's one thing. I think that's the other theme that's going to be out there is like, are EVs even profitable at all? And I think Tesla's proven that they are, but everybody else is kind of on the outside looking in. And I think it would just be great, again, if Tesla could put together a story, stabilize things, and tell people like, this is why you should be, investing. And not everything has to be a 5-year thing. Like, can there be a, like, hey, we make the greatest products, we sell the most vehicles, and we have the greatest like new product introduction story we've ever had in our history this year. Just telling that story, I think, is going to be important, and then just stabilizing. It can't be another year of retrenchment. I think that would be an issue in terms of attracting new people into the stock.
Okay, so I think the way I see it is that obviously we're all correct, right? Tesla today is seen as an auto company. Like it or not, the vast majority of investors see it as an auto company. And so that's why this story that Jeff was talking about needs to be solidified. You can't have an executive team of Tesla looking at the company and saying, it's doom and gloom. They need to turn it around and say everything that Jeff was just saying. But one of the things that all four of us have said is that one of the reasons why we're invested in Tesla is that we see Tesla as one of those companies where the stock is flat for a long time, lots of gyration up and down. But at some point, there's a big narrative change that happens. It has happened 3 other times in the history of Tesla stock, and there's a huge pop. We don't want to miss that. Tell me what those kinds of things could be. What kind of Tesla catalyst, true catalyst for the stock that can happen that can then overcome this an idea that if I model out the earnings that it's going to be depressed and there might be some additional price cuts, they need to invest in gigafactories, and therefore I don't see the EV growth happening more than 30% next year, and that's just not, the stock is built on a 50%. What story could happen that could really just totally change the narrative? So why don't you start with you, Alexandra? You say this a lot. Sometimes you feel FOMO, like you're concerned about the stock because I don't want to miss it when it pops. What exactly could happen that makes it pop?
I don't expect it to pop this year, next year a lot. I'm happy to take it if it does, but that's not my main scenario. My main scenario is 2026, 2027. But what could happen this year is FSD. And with FSD, I really would like to hear from Tesla their business model on FSD. We have heard Elon answering my question in last shareholder meeting saying FSD is going to increase car margins to 80%. We all know that that's part of the story. You can't get a below 20% car margin to 80% just by FSD revenues. That's not how it works. I think what he means is there is going to be a recurring income that is an 80% income bringer, because obviously FSD is written and has been expensed. And so there's a high margin on that one, but it's not going to pull the whole car market, the whole car margin from 20 to 80. Or if it is, please surprise me. That would be the first one. I'd be happy to open the champagne bottle. So the one that I think is the closest today is FSD. FSD working smoothly. Tesla considering it, qualifying it as something else in level 2. I hate those qualifications, but it is. We have to work. We have to work with Wall Street. We have to work with Nasdaq. We have to work with some people that just see it the other way around. So for me, FSD is this year's catalyst if they present it as a business model that works for Tesla and that works for the user. What do I mean? I do believe $12,000 purchasing price for a car purchaser is too high for a regular retail user, but it is too low for somebody who wants to use this as a commercial taxi. So there have to be 2 cases for that, probably bringing down the retail client price to something more affordable, even to something that could just be in the price of a typical option, saying $3,000 for the car. But on the other side, the one that does a taxi business out of it should purchase it as a price as if he would purchase a taxi business. In my job, I do a lot of business valuations, and a taxi business, you quantify the price for it at about 35% of annual revenues. So depending on what you think this robotaxi is going to make, 35% should be the price for purchasing it. So those are the parameters Tesla needs to discuss at one moment. The monthly subscription will stay at $200, will become cheaper at $100, which I think would be encouraging, just to really load up on the number of users. And then also how it expands. In China at the moment, BYD has the level 3 license since June or July last year, so about 6 months. There are a couple of others that are already running on level 3 licenses. Tesla hasn't gotten their license yet. So that's another market that Tesla can explore. So it would be great to have V12, non-beta version, not beta version, and the China license as catalysts. So for me, the 2024 catalyst, the closest ones are FSD. The second one is actually energy. Lots of the energy that we have seen accounted for in 2023 will have additional tranches that are coming into the financials this year. So I think people can be very surprised on how quickly energy will rise. So that could be another good catalyst, because lots of analysts don't have energy at all in their pricing yet. And then the third one, the biggest one for me, is once version 12 works, is the fact that other car makers are giving up on their FSD
Autonomy.
technology, whatever, and are going to license from Tesla. I think that is coming for two reasons. The best software obviously is Tesla's, but the most promising competitors are all Chinese. And my theory is that in the United States and in Europe, the governments are going to influence the car makers to not put Chinese software, full self-drive software, on cars that are running around in Europe and in the United States. The same issues we had with the Huawei phone issues and whatever. And then the European legacies and the American legacies will have to make a choice. Do they propose FSD versions? And if so, and we're talking about cars that will be in the roads in 2026, 2027, and so team up with Tesla as of this year. So those are my three biggest catalysts for this year.
Love it. Thank you so much. That's well spoken. Xander, what do you think could make the stock pop? And when I say that, it's more than 10%, right? We're talking 20% or higher.
Yeah, I thought Alexandra's points were very logical, and I had some questions written down that I was going to say, which is, can energy spike EPS more than analysts are expecting for 24? And I asked that question to you, Jeff, in your thinking. But I think that the market is forward looking. The analysts, they're looking to see when will Tesla grow. And for me, it really is there a sector change for Tesla? Will they be considered an AI company? So if FSD and Dojo connect and they start displaying the bot and showing what its capabilities are, and Alexandra's point regarding actually, Elon having a vision casting and explaining it, super simple. Here's the business model, specifically, not just very broadly. That can, cause that tipping point to where there is this FOMO, right? We talked about this over the previous shows. Where is that FOMO that, like, as you asked me about options, Alexandra, I'm currently not afraid of the stock running away from me. So I sell calls and I sell puts. Because I don't think it's going to fall either. I think we've had the majority of the fall, and clearly the market thinks that, yes, it's a high valuation, but of course, the optionality of all of these catalysts, they can really come into play. And energy is for me the important one. I go back to thinking about the basics and the fundamentals of what Tesla is. And, it's energy generation, right? Storage, and then deployment. So where are they going to, what products are they going to roll out in the future that we haven't even considered yet? So those are the main things that I think about with the catalyst. I think ultimately it's just, you have to get the market to fear that the price is gonna skyrocket because they are an AI company. So is 80 PE too low for for the current earnings? Well, if you look at future earnings, then it's possible that very quickly that PE will drop.
Okay. And
Yeah, I
then
think
Jeff?
if you're thinking of AI companies and you see Nvidia in the 20s, high 20s for PEs, I think when people are looking at if they do start tagging Tesla as an AI company, they're gonna the first stop for money I think is going to be Nvidia, to be honest. So we have to be careful with this. I love the comments from Alexandra and Xander about the business model, and I think Tesla has to articulate that, because before the supercharger announcements, there really wasn't a supercharger business model conversation with investors of like, this is what we're going to do. We're going to open up the charger base. We're going to massively increase utilization of it. We're going to massively increase revenue, and we're going to take our cost structure down further and win all these new partnerships. I don't think that was ever discussed. And I think that would have been, it actually came out the other way. It came out that like Tesla's not asking us for anything, and we just get access to it and we buy a connector from them. So it can't be like that. It can't be like that kind of like, rollout.
Excellent
I
point.
think it's got to be something along the lines of like, we produced network infrastructure, computer hardware, and software. We have we're the only company on earth with the end-to-end solution. It's running in 6 million of our robots right now, and we have a massive lead in data. So you're saying like, what are the catalysts that would drive the stock? One would be an FSD licensing agreement, because a company would need to start now to be shipping in 2027. And companies have to be making these decisions very soon. You saw this wave of capitulation over the last year. Several AI or several autonomy startups just folding, and you're watching Cruise really come under pressure right in front of our eyes, one of the biggest in the US. So those decisions have to be made pretty soon. So I would be looking for, in terms of a catalyst, I would be looking for FSD global expansion and FSD licensing to be very big, because then the Tesla stock conversation really starts transitioning to more of like, well, this isn't an auto business. This is more of a sum of the parts conversation. You get back to AWS and Amazon, and you get back to Microsoft. You get back to these conversations of like, wow, this is a much bigger thing than just selling cars. They're selling the charging solution. They're selling the autonomy solution that every car on the planet is going to need. And it looks like they have the lowest cost to serve per mile driven of any of these other solutions that are out there when you really start digging into the metrics. So FSD expansion and FSD licensing to me could be a plus 20% type catalyst or more to the stock. In terms of Optimus, I think it's just going to be another year of significant, meaningful progress. Even if a couple of them go in the factory and start doing some material sorting or moving boxes in the warehouse, that would be great. That would be a great milestone for Tesla. But the commercialization of this, where it actually starts taking a meaningful amount of headcount out of an operation, I think we're still a little bit of ways away from that. So I think we're going to be waiting a bit on Optimus. I don't see us starting up a robotaxi business in the next year. The other big catalyst would be is if there's an unveiling of the 20. My third would be the unveiling of the 25,000 or sub 25. I hope it's less than $25,000, to be honest with you. I hope it's something like 22,000 or something less, where they can bring that cost structure down meaningfully. Because then that just, to me, that changes the whole trajectory of the company. That means they're going to launch a platform that can have as much production as all of their entire current production put together. And when you do something like that as a company, you change your what you look like to the supply base, what you look like to partners that serve you, and what you look like to the investor community are just two completely different things, because you basically just doubled your key core business by introducing this one product line and showing confidence that you can ramp it. So if they show a vehicle that's very desirable that people want, and then they describe the fact that it's going to be in this unbox process, it's going to be easier to build, it's going to be faster to build, it's going to be less greater output per square meter than any car built in history, greater velocity to build through the factory than any car in history, and they really properly roll it out, which is the way they're actually developing the vehicle now, But if they give it its due and tell us when it's coming, then analysts can start to price that in, and then I think it's off to the races.
That's actually a good question, if you don't mind, Herbert, me asking you. When we initially heard about Mexico a year ago, it was supposed to be the quickest built factory ever, 6 months. Okay, now let's just call it 12 months, because first of all, we're already 6 months late, and then who knows what happens. But let's say 12 months. So by the end of this year, we should have Mexico ready. Which cars are going to be built in Mexico? Only the low cost model, or do they really want to build all models there?
Well, if I'm Tesla, I want to bring up Mexico on something that's proven. So if the 25K car is proven in Austin and it's stable, then I have less of a problem bringing that up there. And if I purposely design the first phase of that factory to be all unboxed, then I'm going to be built. That'll be the first vehicle I build there. I'm not sure you're building all products there, because now you're introducing a level of complexity that may be unnecessary. If you can do all the world's S and X volume out of Fremont, then just keep it there. If you can do all of North America's Model 3 volume out of, then keep it there. Unless you've got a plan for Fremont. If you have a plan for Fremont where Mexico ramps, Austin ramps, and then you don't need Fremont, well, then that's a different conversation, because then I think you would consolidate into Mexico and Austin. But I just think the introduction of this vehicle completely changes the landscape of the company, not only because of its cost target, but because of its volume target. It's actually going to allow suppliers and allow partners to get to the price target they need to get to organically, versus it being this challenge thing of like, yeah, we're going to go after this thing, we're not sure it's going to work or not. I mean, it's a pretty proven recipe. There's a lot of data. There's a lot of elasticity data that would show if Tesla gets down to that price target, they're going to sell a lot of cars.
So I want to give my answer to the question of what will make the stock pop, and I've got a very different answer than what you guys have said today. So first of all, it's all about nuance, of course. And so when you say that when the Model 3, the compact car is revealed, it can't just be a reveal. It's very historically shown that anytime specifically even Tesla, whenever you do a product reveal, that does not pop the stock. Now, the difference here is that if they reveal it and then actually show that they're ready to take orders and that it's going to come within 3 months, not 2 years from now, that's a difference. I agree with that. I don't believe that robotaxi as a business model is going to come this year. So I'm a little different than you guys. I don't think that robotaxi will make it this year. What needs to happen for pop the stock is Tesla needs to be seen as an AI company. There is an AI boom, an AI tech boom, and companies are being rewarded. Their stock is being rewarded if they are lumped in as an AI company. And not only that, but Tesla needs to invest heavily. This is a war against all the other companies, not only to attract the best talent, but there's a race to get the biggest supercomputers in the world to really get ahead in the vision AI that we talked about. How do you get to Tesla being seen as an AI company? It's not going to be Dojo as a service, unfortunately. That's going to be another year out or longer. And it's not going to be robotaxi. That's going to be a year out or longer. I'm different than you guys because I believe it's going to be the bot. Now, very clearly, I'm not saying that the bot's going to be sold and all of a sudden it's become a revenue item. I'm going to just say that it's one of those things that will capture the investor's imagination when they physically see a bot actually working. I'm very, very aware of the limitations of the bot. Okay, I've been studying this very carefully. And I know just very recently, Milan Kovac, who's the director of engineering at Tesla, just showed in kind of his tweet, it kind of showed that maybe end-to-end is not being used for the lower half of the body, that they're still kind of falling in terms of ability to walk. Even with all of that, I'm telling you that these things are going to be solved, and the bot does not have to walk very far at all for it to be used at the factory today. Digit is a bot that does not have hands, it does not have a brain, and it's already working today in Amazon's factories to be able to do pick and place, short movements. There's lots and lots of jobs that can do that. So for Tesla, what they need to do is come in and say that I'm investing significant amount of resources to build the largest supercomputer in the world. I've got the best AI real world vision. I've got robotaxi on its way, but let me show you what it can do physically by the bot today. And in the next 3 months, we're going to see a demo of the second demo of showing the intelligence of the bot and what it can do, combined with the next gen version. And just that alone could be enough in the next 6 months. We were talking about like what can make the stock pop, and it's got to be something visual. The chat GPT moment when people see that the bot is inevitable, that it's actually able to be used eventually, that they'll make thousands of them the following year and so forth. So it's much more clear to me that that can happen than robotaxi, that can happen. If that we already know that Model 3 is coming out, that's going to change the game for the company for sure. But if there's just a product reveal, not enough. It's got to be, here's a product reveal, and by the way, it's going to come out and sale in 3 months. If that happens sometime in 2024, agreed, that will pop this stock. But typically, here's what it looks like. People get excited. It does not make any change to the stock. So just a little bit difference.
Yeah.
Like Tesla needs to show that they are truly an AI company, and they need to show that visually, not just, By the way, Tesla's already said, and many different tweets, that they're not just working on humanoid bots. There's going to be all sorts of different bot animals. So if they show you that I can take a camera, any camera, and be able to show you by looking at real world, it understands when it opens up and you press on, turn it on, it knows exactly what it's seeing, right? It knows the context. It knows what, that's a door, that is a fire hydrant, that's a mailbox. It knows these things, which other companies don't have that ability. And then to make decisions based on that. That alone could be enough to just shock the world to say this is what Tesla is able to do that no one else does. These things are going to be shown, and they need to come out this month, this year, to really show the world that this is what they're capable of.
It's really funny because we all agree, and we all said it at different moments. We all agree we need to hear from them, right? I mean, that's just the one thing. So that made me think. So we have the results on the 24th, the earnings call. We have the 10K 3-4 days later, and then we have that what's Tesla's plan from Elon presentation. So that makes me think, first, I reiterate for the third time, and maybe the third time is the charm, that maybe Elon is not on the earnings call. Hallelujah if that happens, because I just would like an earnings call that is just smooth and whatever. They don't have much expectations for these earnings anyway. So I think it would be just perfect if that's not the case. And everybody would just say, well, Elon's not here because in 5 days he's going to do his talk, and that's then it. And that would be just good. Then we have the 10K to dissect, and then we can listen to him. But you're completely right. The moment has come to hear a little bit more how this all comes together and to give it a little bit of insights. The AI day, there will be an AI day. It will be in the next 3-4 months, but the AI day will be a recruitment event again. So I think that's going to be too high level. We will love it, but too high level for Wall Street to understand. I think you're giving them too much credit. But I agree with you. If the thing is that actually Tesla Vision can replace Ring, right? Because now Ring is not just giving you information on your phone, but Ring is making, Tesla Ring is going to make a decision whether this person can go in or not without you having to manipulate your phone. Well, then that's it. The whole market has changed in one presentation.
Yeah, but okay, a couple of things. So I do not see robotaxi as a catalyst in the next year. So I didn't say I'm talking about FSD, just to be very clear. But Herbert, you were disagreeing that like if they roll out a 25K vehicle, and I agree, it has to
reveal, not a product reveal, not a rollout of the car.
Okay, yeah, I agree. When you do the reveal of this vehicle, it has to be very close to the rollout. And the rollout, I believe, and we can talk about this on another show because I think it's a worthwhile conversation. I think they need to build hundreds of thousands of these vehicles before this thing actually goes on sale. It can't be like the rollouts they've done before where people have to wait 6-9 months for their vehicle. It's not going to work on a 25K car. But I think if they do that and they say this thing's going into production within the next couple of months, I do think that would be, I think the analysts they'll be able to go over to their spreadsheets and start writing stuff in. And then all of a sudden you're going to see forward-looking EPS estimates go up because I don't think they have much of this in the next couple of years. But what I disagree with you is you said basically they'll do a bot demo and the stock will pop. And I don't think that that's going to work. I think the bots, I think the demos are helpful and I think the demos are building excitement, but I actually don't hear any of the analysts talking about the bot in any meaningful way. And I think coupled with the demo, they're going to have to say, we're going to replace 10,000 people of labor
I don't
by
say
December.
demos. I clarified earlier that I said that any product demo does not pop the stock. So a bot demo does not pop the stock. What I'm saying is that you need to physically see the robot working in a factory, even if it's just hundreds or thousands in the factory working. They don't need to sell it. I think that will capture the imagination of investors to realize this thing is useful. This thing will be sold, and it's inevitable that they're able to build it. And then they can say, I'm going to make 10,000 of them, just like Agility did with the Digit. They said, I'm building a factory in Oregon. It's going to create 10,000 of these bots per year. Tesla announces that, and we're off to the races. I mean, I guess it's like a moment that people need to visually see AI. That Tesla is an AI company, and visually understand that the bot can make decisions that other bots or other products can't make. It's not a demo. It's got to be physically in a factory.
But Herbert, Wall Street is really old-fashioned, but investment firms behind it even more. So in Wall Street, we still have car analysts. I'm not talking about their knives, but about the typical analysts being car analysts when they measure Tesla. And again, Nick Colas is certainly the best of them, but I've never heard the word energy out of his mouth. I've never heard the word AI out of his mouth or whatever. So now you're hoping that once they understand there is a bot and the bot is useful and has a use case, that they will be able to switch. They cannot. They will then have to sit together. And the only firm that's actually happening is JP Morgan. Adam Jonas is pulling all his team around. One thing I'm doing all the time, as soon as his updates come out, I check who wrote them. So yes, his core team, him and his two...
Morgan Stanley.
Morgan Stanley, sorry, not Morgan Stanley, you're right. Thank you for correcting me. So Adam Jonas has his two junior analysts with him. That's when he does the updates. But when he does the huge ones, the major updates, he pulls in for Dojo analysis, his chip people that are absolutely outstanding. And now he's going to pull in the robotics people. So now you have suddenly analysts who are as deep in the robotics field as you are. I mean, I don't even know the 10, 12 names of robots you're currently analyzing all the time. And none of those Wall Street analysts do. So if you hope for that the Wall Street analysts can switch and understand suddenly that business case, and that the Fidelities of this world, and even worse, the pension funds of this world, get this instantly, you're too hopeful. It will take them months.
Let me address that. Yeah, let me address that. So first of all, what we were talking about is what could actually pop the stock. And I think that if we all agree that in order to get an analyst to jump in and start investing in a stock, it needs to be proven revenue stream, then nothing's going to pop the stock. Okay, we're all going to wait until energy actually shows revenue. We're going to wait until Dojo Robotaxi is actually not only announced as a business model, but actually physically in place, and they actually see, and it's actually rolled out in multiple cities.
I think
and
FSD are. I think FSD understand that.
So my point is that which could actually get investors to have that chat GPT moment. Now, chat GPT happened because we all got access to this, chat GPT, on.com, and we all played with it, and we were shocked at the answers it was doing. And then all of a sudden, every productive professional out there started using it to help with their day-to-day jobs, and they became productive. Investments started to flow. Even before ChatGPT themselves, OpenAI is making billions of dollars. They've got a $20 a month service. But their valuation is such that people are realizing, oh my God, this company is about to displace doctors and lawyers, and I'm going to raise, their valuation goes up. Nvidia is the main contributor, the one that got beneficiary of this because they're actually making these sales, and so you can see this pop. The only other thing I can see happening for Tesla would be something that changes the narrative immediately. And the only thing would be the bot. I think that Robotaxi is interesting. They can calculate that. It'll be slow burn. Everything will be a slow burn. I'm just saying to you that it's got to be, and maybe it's got to be more than what I've described. Maybe it's got to be more than just bots walking in a factory. It's got to be something that blows people's minds that this bot is brilliant. It's smart. It can do anything. There was a demo dropped today from these 3 university professors, and they showed this bot that can do all these things inside a home. Now it was teleoperated. And so the
Exactly.
demo was interesting, but then they find out later, they announced later that it was teleoperated. A human was doing it. But imagine if this was not teleoperated and the bot was able to demo this. That's the thing that can capture the imagination of investors. That's what I'm saying. It's got to be something that you know, powerful.
We always come to the same point. I think we always come to the same point, all four of us, is Tesla has multiple revenue streams coming, multiple. But as Jeff said, if ever I could ask one contradictory question to Elon, it would be, why was there no business case or what is the business case for giving access to charging to all these other people for free, to all these other car makers in North America? Because I really would like to understand what's the business case is. Is it higher utilization of the chargers, whatever? But that apart, Tesla is not very, very good in explaining its business cases. And I think we're currently at a fork where we have 4 or 5 different revenue streams potentially coming. But for all of them, it needs to be put into simple terms how Tesla is going to make money and how it's going to be utilitarian for Tesla itself, others who are going to license it or whatever. And that's the information we need. And I really hope that's coming at the end of the month.
Great discussion. Let's move on to the macro and the rate cuts, and then other stocks. We just brought up Nvidia. Jeff, do you want to give us an update on what you're expecting with the rate cuts? I thought that the last recent discussion that people have reduced their expectation of a rate cut in March from 90% to 70%. Is that right?
Yeah, I don't have the exact numbers in front of me, but there's been some Fed speak this week that has basically caused that to cool down a bit. I think the ADP number was a little bit hot this morning. The big numbers tomorrow is the actual payroll, the monthly payroll report from December. The JOLTS report was pretty stable from the month prior. The 6-month rolling PCE, the PCE is what the Fed really, that's their inflation gauge. And that 6-month rolling view is under 2%. So I definitely think the Fed went from thorough conviction, member by member to raising rates and keeping it higher for longer, to they went to a split group somewhere probably in November and December. And now we'll see the data from January, and we'll see, is there further fracturing of that group to where now it starts pulling into earlier and earlier rate cuts for the year. So the speak though this week though was kind of, I think that cooled markets off a bit. It was part of that equation that cooled markets off a bit. So we'll have to see where that goes. In terms of other stocks like Nvidia, Nvidia gets cheaper after it goes through its earnings report. I mean, that's what's happened the last couple of earnings reports. They're both the earnings that they post and then their guidance, turns it into basically a cheaper stock. The question I think a lot of people are asking is, for how long can they do that for? How, was this early demand of people trying to just basically stock up and get everything they could get because there was so little supply? It's not double ordering. I've gone through this a couple before. I think you will hear inexperienced analysts explaining that that double ordering could be a phenomenon. I think early ordering could be a phenomenon, but in terms of like, I order twice what I need, first off, these are very expensive devices. But the other thing is, if you order the phenomenon in the silicon world of double ordering is you're giving a long-term forecast back to Nvidia and you say, I need 100,000 of these in the fourth quarter of this year, and then you only take 50K, and then Nvidia says, fine, you'll just take your 50K and I'll go figure out what to do with the other 50K. That's not happening. When Nvidia is taking these orders for 100K of these cards for Q4 of next year with a particular customer, they're doing a take or pay agreement. So if that customer doesn't take all 100K, they're paying for all 100K, whether they like it or not. And that's what you do when you're in a position of being globally supply constrained and having, basically this unlimited demand. Those are the terms you can put back on your customer base. And it's actually fair to you as the manufacturer, and it's fair to them as the consumer of those devices, because they would want everybody on the same playing field with in terms of that. So I don't think there's a double ordering thing. And so the question is when does Nvidia ramp up? When does AMD ramp up with their solution in meaningful quantity? And where does all this go? How quickly is AI being monetized? And I think we're still in and when does supply equal demand? I think there's still another year or so of this in front of us. So we'll have to see. We'll have to see how that plays out. But I still think they're in a great position. And beyond this, they've got other solutions that are even higher powered. They've got their software solution. They're going to be in great shape for, I think, many years to come. I'm not giving advice, but I think they're going to be in a very powerful position. So anyway, those are my thoughts on those two topics.
And then what about you, Xander? What's your thoughts of what's going to happen with the stock market?
Well, I have a confession to make. I am no longer all in Tesla. Someone messaged me and said, "Did you buy any Nvidia yet?" And I pulled the trigger and bought a leap for Nvidia out to June 2026 for 600 strike. Jeff, not to put you on the spot, but did I just make a terrible mistake and I'm going to lose all of that money immediately? Or is the forward guidance that we've heard from Nvidia? I didn't do much due diligence.
How much did you pay for it? How much did you pay for it?
$103.76, so 10 grand.
So 703. Right. You need 703 to break even.
Well, okay. That's not how I think about it. That is the break even, but my thinking is direction. If there's all these orders coming in, and and we have we're near all-time highs, but it pops over the next year, and it goes to 550. That contract will be worth more. So that's how I think about it.
You don't want to keep it until 2026.
I'm not keeping it till it's just a play, right? It's just like when I played whatever Celsius or it's just a little play.
Yeah, I mean, I don't give daily stock advice out. I don't think the stock is top tier, so I think you're going to have an opportunity to trade that. And like I said, I think they are a great investment. They've got a visionary CEO. One of the original, founders of the company, and you've got geopolitical risk there. But in terms of like the company, visionary CEO, performance, roadmap, sales, earnings, it's a pretty good place, I think, to be in. And but yeah, those are my thoughts on it.
Thank you.
It's like
advice.
When people talk about the gold rush, right? The companies that really do well is the picks and shovels, right? Those are the ones that do well. Nvidia is a pick and shovel of the gold rush. But I think there's a couple points here. One is that this is not just a gold rush. This is AI, and this is not just a blip. It is one of the most consequential changes in the history of the world, and we're at the early innings. And so if you invest in something like an Nvidia and others that is very early on, and then, you always say, is it at the high? And it's just a matter of you trying to figure out how big is this market changing? And if it's like, it's so big that we're just at the beginning, this is early. And in the same way, that's how I see Tesla. When Tesla is shown as an AI company and they start showing that they are a pick and shovel solution to it, they're actually the beneficiary of all of these NVIDIA chips, and all the beneficiary of all the kind of the intelligence that you can get from AI. And that's where I go back to bots, right? Because the bots is the one thing that you can actually is the beneficiary of the intelligence that you can get. And if you think it's real, and I do, and this is not a fad, this is just the beginning of what we are.
I have one question. Is there for any of the other Mag 7 stocks the same, I'm going to call it cultish groups on YouTube, on X and whatever, or is it only for Tesla? Because obviously I never looked outside of Tesla, but is there an Nvidia group? Is there a Herbert for Nvidia?
Yes.
No?
Sherbert. Yeah, Sherbert.
No, there definitely is. There are YouTube channels that are so focused on AI, of course. That's a really big deal. There's companies that are, like you've got Tom Nash is all over Palantir.
Yeah, but they're not as precise on Tesla as we are, right? Because we're so focused and discuss Tesla all the time. They talk Bitcoin and then they talk something else.
I think there's pockets. It's just that with Tesla, it is the number one option, traded stock. It's the biggest thing. It has the broadest TAM, right? Like think about how big the TAM is if you can take labor out of the equation and we all become artists and YouTube creating content creators.
Yeah.
So yeah.
All right. That's the fun topic right now. What we like to do in this show is always cover some other things that is outside of Tesla. This one's not exactly outside of Tesla, but it's a discussion about makers versus takers. So John Stossel came out with a 5-minute clip talking about the difference between a maker, which is Elon, and takers. In this case, he's talking about Senator Warren and the government that's trying to just tax people. I'm not going to play the whole thing, but just to show you little clips.
Makers create cool products like Teslas. Some makers get rich.
Elon Musk is now the richest person in the world.
The takers are often politicians.
We must substantially increase this tax.
Politicians take other people's money and spend it the way they want.
That's a lot of money. And I want to make sure it's there to hit on the climate crisis.
Elizabeth Warren and Elon Musk may be the best examples of maker and taker.
It is time for a wealth tax.
She's one of the big takers.
We're going to hold the big guys accountable.
Let me pause it there. So obviously you're comparing, capitalist entrepreneur versus a politician. Yes. So these politicians, that's all they do is they want to tax you. They want to talk about, they're trying to get your vote. And they're going to say, I'm going to get you money from taxing these greedy corporations and greedy companies. But beyond that concept, what do you guys want to talk about? I mean, it's like a maker is the thing I love. I love people who actually create things. And I don't know, in this show, I've run afoul with some of you because I'm not a fan of Warren Buffett. I don't see him as a maker. He's an investor and he puts money in, but he doesn't actually build companies. And so I'm much more of a fan of Elon Musk and Steve Jobs and the people who really create net new products that benefit society. And for them, you make as much money as you want. You could pay your fair share of taxes, but I really am not supportive of these, what he talked about, the takers, who that's all their goal is, just to try to take as much money from everyone else. Anybody want to comment on this?
I'll just say that the taker conversation is very confined to the existing world, the existing pie, and the real true makers are the ones that are trying to expand the size of that pie, make many more pies, make them, and that's the thing that's missing here is this smaller world thinking of like, this is all the money that's in the world, this is all the resources that are in the world, and I'm going to. These people, and by the way, their math never works. If you actually said, go to the board and say, taking all the money from Elon Musk, take all the money from Jeff Bezos, take all the money from everybody that makes this amount, it doesn't actually solve the problems that they're talking about. So I'm a big fan of just as you described to Herbert, but also just leave the best proven capital allocators in the world with as much capital as possible. And let them pay whatever taxes that are fairly owned for whatever they earned, but leave them with everything else so they can make more and make bigger pies.
Yeah.
If I can jump in, because I lived in a country that has a wealth tax in France. I lived for 24 years there. And I just sent you, Herbert, I don't know whether you'll be quick enough to pull it up, a statistic of what happens between 2020 and 2023 in different economies in the world. I sent it in the DM group chat of the Cyber Bulls. And what's really interesting is you obviously have the emerging markets that evolved a lot over these 23 years. But you have the US that evolved by 100% and France only 68%. And that differential of 32% I would say the main contributor is that wealth tax, because people leave France for that, entrepreneurs leave them, or entrepreneurs don't do new businesses because they're just held back by taxes. And that's a really precise. Oh, thank you. You're good. Thank you, Herbert. So you see the US is here at 108%, and you have France at 68%. So 40% GDP difference of two countries that have potentially the same economic growth, and yet they couldn't do it. And when you see that, it mostly leads to overtaxation. And so, I mean, obviously we're praising all year long the makers and Elon in person, but the takers really have to watch out what they're doing, because they really want to use the word, but suck out energy of the economy, and that energy is then lost forever, because these 40% loss in GDP, the people pay it. They may have a better social infrastructure, but the lack of growth that is happening is detrimental to their own wealth.
How does this all change when you've got bots? So once you've got bots, like
Yeah,
makers,
we'll be in
can we still be
abundance.
makers? I think some people will argue whenever new technology comes, it actually expands and more people can create more bots, will create new kinds of industries that we can't even imagine. But this time might be different, because you've got both white collar chat GPT bots that's going to take over white collar jobs, and then you got your blue collar jobs that's going to be taken over by robots. Now you've got, what are you and I going to do? Are we going to create companies still? Are we going to make things now that we have these in our disposal?
But we'll still do
Or-
YouTube videos, right? And we'll still do X videos.
Not sure. There can be
don't think so?
AI bots that's going to replace us, that looks more human, that's funnier, that doesn't make mistakes.
Funnier than me? What are you talking about?
It'll be a Herbot. Instead of Herbert, it'll be Herbot.
That's a good one. And Tesla botty mommy.
Yeah.
Yeah, but back to the question. My thoughts on it is that people love free stuff. They just they can't get away from it. I learned to hate free stuff, and it's been the most liberating thing ever. I think that, like, once we got off the gold standard, I posted that I'm thinking of buying the Cybertruck, but my Model Y just sits in the driveway the whole time. So what a stupid purchase! And people are immediately go, oh, 6.69% interest rate. That's insane. If you don't have the cash for it, just pay for it. And that just shows me that people do not understand how money works. In this country, debt is a tool. It's important to understand that once we got off the gold standard, your money can be printed. What are we at? Like $33 trillion in debt now. So there's the economics that go into into it, and it's really important to understand that, like Ray Dalio explains, if you're you get the privilege of being the reserve currency, there's societies tend to go through these cycles, and we're in that cycle where the popularity, if you're popular, you get the votes, and then forcing people to take care of the poor, and that's what taxing is, right? You're forcing people to to pay for roads, and to pay for police, and to pay for infrastructure, and all of those things. But, like, look at, this video goes on to talk about how like SpaceX, the privatization caused a 10x reduction in costs, and they show a little latch and how it costs $1,500, and SpaceX took a bathroom latch off an airplane and did it for $32 or something like that, or whatever the number is. So, like, you got to realize that business in innovation actually is beneficial for us in the end. But if you're focused on getting free stuff, you're actually paying an inflation tax, and that's what is the real my understanding of money, if I can get a loan for 2.75% on my assumable VA house purchase that I'm doing right now, that's under inflation. That's literally, I shouldn't pay that down. I'm going to ride that all the way, because that's smart. And if I can take money and use it to sell cash secured puts, or I could take money and invest it into Tesla or Nvidia, and these companies are growing faster than the interest rates or even like margin purchasing, that is my understanding of money. I want, if it's obviously not guaranteed, but that's where the S&P index funds comes in, the history of it. If you historically, you look at a 15-year time horizon and you're getting 8 to 10% interest, but money to borrow or to lend is less than that, then what are you better, are you going to pay down and have a house free and clear, or is it better to use other people's money to grow? And that's how I look at it, for business, and how I went from literally in the dirt. I'm a first generation immigrant and grew to 4 businesses by borrowing, having great credit and just borrowing. And I know there's a lot of negativity against people, and they say, but yeah, it's easy to say yourself up by the bootstraps. But that's how America works. And if one can understand that, I think that, you can see how many people are trying to come to America to hopefully become workers and not just takers.
You're completely right, Xander. And I mean, I'm first immigrant, as you know, as well. And my clients are, my day job is in immigration. And people come from all lives and different situations, but they all come because they understand America gives makers a chance. And wherever they are, they don't have that. They have more takers than makers. And that is still the greatest country in the world.
Alexandra, today there was a big discussion that Elon Musk was involved in about, the rush of these illegals coming in through the southern border. At the same time, there's so much rules and regulation to prevent the smart, people who are going through the legal format. So you should follow that conversation very clearly. You should present something to Elon. You would be the perfect person to represent kind of a program to really just get back out there and change this game, because it's a big deal. This is,
It is. I agree.
It's an imbalance that's changing. That's going to harm the United States of America.
It is. And to sum it up, it's Congress that's stalling everything. Nothing happened for 30 years. What is happening at the moment is there are 1.4 million green cards every year, and 90% are only for family reunion. And I'm not saying there should children, parents, marriages, but there's only 10% of the 1.4 million that are for merit, for employees or for people that deserved having a green card. So only 140,000 per year for a nation that's nearly 350 million now. So that's a complete unbalance. And this law has never been challenged because nobody wants to look after it. Immigration is a great fundraiser in both subjects. And the fundamental basics would be so easy to change if just that one ratio was changed. But nobody wants to tackle it.
Well, that's my point. Elon is motivated. He wants to get this done. You should give him a proposal. And with you and Elon, this will change. So we can break through the Congress stupidity that's happening right now, with the politics that's happening. So I want this to happen. I want you to propose something to Elon. I hope he listens to this and we get the word out, because you are the perfect person that can solve this problem, especially with Elon's backing and his desire to fix it. So, wow. This was a deep episode, guys.
Yeah. I thought Jeff and Alexandra and Herbert, you guys made amazing points.
And you, Xander, no doubt about it. We were all sick, right? Who is not sick today?
But we're here.
The only one who was not sick did not show up, Christian.
That's true. Telling us we should take vitamin C.
Anyways, okay, great show, guys. Thank you very much. And tune in next week. We'll do another Cyber Bulls. Thanks, everybody.
Bye-bye.
Thank you.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.